Welcome back to the Lone Ranger Radio Show. Thanks for tuning in today. We got a lot to cover. We talked a lot about why buyers should be jumping in the market in the last segment. This segment, I want to talk about the market. I want to talk about what interest rates are doing, how the Fed impacted the market, so that you've got a pretty clear understanding, because most of you do not have a clue as to when the Fed does a Fed hike or cut, how it affects mortgage market. You think it's a direct correlation, and I'm going to share with you so that you are smarter than your friends and you understand what happens when that happens. But before I do that, I want to talk about a couple of opportunities that I see in the market. So I had a meeting with a builder called Hardison Homes. They've got locations, a couple locations in St. Cloud. They've got, I think, Eustis, Mount Dora. They've got Popka, several locations, and they've got townhomes in the mid 200s. Now listen, I like this builder a lot. I've got one transaction I've got with them right now. So I coordinated that they would pick up your closing costs if you used my services. So if you're a real estate agent out there, or if you are out looking for new construction, I want you to call my office. I'll get you connected. If you don't have a realtor, use my Lone Ranger real estate rebate program. You get 25% of the realtor's commission back in your pocket. I give you a great referral to a great real estate agent. That real estate agent does not pay me one red cent for a full approved loan referral. Yet you get part of their commission back. So you have nothing to lose and everything to gain. Even if you're looking at new construction, you need a good realtor to negotiate for you. So anyways, I met this builder. I went out and I did a presentation. I went to their sales meeting, and come to find out, I knew half the salespeople even in there. They'd worked for either other builders that I've worked with in the past, or they were real estate agents I've worked with. So they got a real dynamic team. So Hardison Homes, if you're interested in new construction, you let me know. I'll get your closing costs paid. I'll connect you with a great real estate agent. We will get you fixed up. No questions asked. Now, then I got Trinity Family Builders, family owned operation. I've worked with these guys for 20 years, the Oros family. They've got communities, St. Cloud. They've got Davenport. They've got in Groveland, Mineola. They've got Eustis. And even, I think even out in DeLand, we've got a community out there right now. So communities all over the place, all over Claremont, homes ranging from the low 300s all the way up into the high 600s. They've got 6-bedroom, 4-bath homes for you big families that want to, lots of room to spread out in. They will pay all your closing costs allowable for a loan program, up to $35,000. Trinity Family Builders. If you go to my website guides you to each one of their communities. But if you let me know, I'll connect you. So you got a real estate agent to show you the properties. You get the discount back from the real estate agent, and you get all your closing costs paid by Trinity. Those are some really good deals. Listen, they've got move-in ready. Same with Hardison. Move-in ready homes. I could have you in a home by Christmas time, no problem, your own home. Wouldn't you love that? Wouldn't you like to start off 2026 as a homeowner? Come on. Let's quit being a renter on the planet. Let me help you. And if you don't want to buy new construction, you want resale, let me connect you with a real estate agent that'll give you 25% of their commission back. It's a no-brainer, folks. It's a no-brainer. So, all right, let's get back on track. So, on October 29th, the Fed Reserve cut the Fed rate a quarter a point. So, what happened to interest rates on mortgages? Well, you have to remember, mortgage rates don't go up on each rate. What happens is the discount rate is affected. And all that means are the points. So when lenders price loans out, it might say, okay, today at 6.5 is a 0 point, 6.25 is 1 point. So it adjusts the points on that. That's how lenders pricing is adjusted. Most of you don't know that, but that's how it's adjusted. So would you expect that if the Fed cut the Fed rate a quarter point, that interest rates would go from 6.25 to 6%? Because if that's your understanding, you don't understand how the market works, because it doesn't work that way at all. Now, what happened to interest rates? They actually went up. On the discount point, went up 30 basis points. So whatever On the day before the Fed made the Fed cut, let's just say 6.25 was at 1 point. 6.25 would be at 1.3 points. That's right. By the end of the day. So why did rates go up when the Fed did a Fed cut? Why would that happen? You need to understand that because it's important. And you know me, I'm a financial guru. I'm a 10th grade dropout. I'm not a Harvard graduate, but I know this business and I know how it works because I study the market and I've committed my life to understanding why these things move. And you have to understand the bond market, the stock market, equities. You have to understand secondary markets. And I've practiced and practiced and practiced with the best in the world, the best coaches in the world to help me understand that. Why? So I could be a better advocate for you. Now, so why did the rates go up? There's a couple of reasons. Forgive me. First of all, we were anticipating a 99% chance that he would do a Fed cut of 1/4 point. We also had a 94.5% chance that on the December 10th meeting that's up and coming, we would have another 1/4 point. So the market built a 1/2 point in. I keep telling you, don't wait for the Fed to make a Fed cut to lock in a rate. You lock it in between 3 and 1 week before the Fed cut, even up to 2 days before the Fed cut, but not after the Fed cut. It always gets worse or mostly gets worse. So the Fed had announced that we're going to get a 1/4 point cut, and they gave us a 1/4 point cut. But what did Powell say? Powell says, I am not going to guarantee a 1/4 point cut on December Fed meeting. That is a foregone conclusion. Also, we are watching inflation, and inflation is a bigger concern than cutting the rate. So what happened? We lost that extra 1/4 point and even an extra 5 basis points just by him saying that. So rates actually got worse. So if you want to look at a bond chart with me, and I do all these consultants with my clients so they understand the market. If you don't want to understand it, you just want to know what the rate is, that's fine. You want to be a sharper person and you want to understand it, I'll show you the bond charts and I'll show you what happens. But rates today are about where they were about a week and a half before the Fed cut. That's where they were. Now, they got better right up to the Fed cut, and then they dropped. When I say dropped, the bonds dropped and rates went up. So, for you to understand why that happens, mortgages for homes are tied to the 10 and the 30-year Treasury bond. They have nothing to do with the Federal Reserve rate. Nothing. They're not correlated. Now, as the Fed cuts rates and it improves the economy, it can trickle down to the bond market and to mortgage rates. So those things can happen. But generally, the knee-jerk reaction can be the opposite. And that's exactly what we saw. Now, we also saw that the 3 times prior to this. So we had November and December of 2024, both times. You look at the bond chart, we lost ground. And on one of them, the first one that they cut a 1/2 point, it tanked the bond market. So rates got much worse. So if you think that rates are going to get better with Fed cuts, you better learn and you better seek to understand because it's not correct. And that's why I like to get my clients locked in prior to the cut, not after. Now, some people, they may not trust me. They may just say, you know what? I don't know what the guy's talking about. That doesn't make sense that the Fed would have a Fed cut and rates would go up. So they don't believe me. And that's okay. I mean, I'm not trying to do a sales pitch. I'm only giving you information. You can go somewhere else and get your mortgage. You won't get as good of a mortgage, but you can go somewhere else. People come to me and you listen, and I see you guys. You come into my office. I've some of you I've done 10, 12 mortgages for and helped your family. So those are the people that count on me and trust me. And I would love to earn each and every one of your trust, but I don't think I'm capable of doing that. Not because I can't do it. It's because you don't. You just may not have the trust in anybody. And that may be just the way you operate. If you got to know me and you know who I am and you know what I stand for and what my principles are, you will know that you can guarantee that if I tell you I would do that or I wouldn't do that, I'm giving you the best information I can. Now, that doesn't mean I have a crystal ball, and then I don't claim to have a crystal ball, but I know more about the market and I read the market more than any of the mortgage people that you're talking to. I guarantee you, you show me one loan officer out there, one loan officer out there that has the knowledge. I'll put them to the test and we'll see how good they are. Now, there's a few, a couple of them are in my organization. I mean, we got some of the top, matter of fact, Cross Country Mortgage has the top loan producers in the entire nation, bar none, any mortgage company around. More than Rocket, more than Guild, more than Loan Depot, more than any of them. We got the top of the top of the top. Why? A couple of reasons. We're the largest. We have the most products. We have the best pricing. So why would you go anywhere else? If you're a loan officer and you don't think you got the best deal, you come see me. I'm setting up more branches. I've got probably 6 or 7 branches in Central Florida, but I'm opening up branches nationwide. You want my help? You come see me. 407-706-3313 or 813-213-4009 or go to webringyouhome.com. Now, I got just a couple minutes before my next break, so I want to talk about opportunities. So we talked about first-time home buyers. We talked about home buyers. Now I want to talk about move-up buyers. So you're sitting on a 3% 30-year fixed rate on the house you already have. Interest rates right now are between 5.5% and 6.5%. Okay. Depending on credit score, type of loan you're doing, whatnot. Okay. So you're like, oh, I don't want to go from a 3 to a 6. Okay. But why don't we keep the house you have, use that as a rental property, put 5% down on the next home, buy that home, and if rates drop in the future, we just refi it, drop you down. How about that? Now you got a rental property that's got a 3% fixed rate on it. And I have a client right now who's got a 2.5% fixed rate on it. I'm like, we're not going to get rid of that property. Now, some of you may not qualify without doing that. Some of you have to sell to be able to come up with the down payment to qualify for the next one. But you do realize that I can wash the payment out on the one that's rented. So I'm not counting that payment against you. My name's Bruce Woodburn. They call me the Loan Arranger. My sole job right now, my purpose in life is to help you grow wealth. If I can't help you grow wealth, go find somebody that can, because I can guarantee you, forgive me, I guarantee you there's no one that you're going to meet that's more committed to helping you grow wealth. Look at, so what? I get a mortgage out of it. Okay. Use somebody else. I had a client the other day. He was already up with another lender, but the lender was screwing him around. So he called me for advice. I said, you know what? I'll give you advice and you can still use the other Yahoo if you want to. And he was, wow, I was impressed. Well, he switched to me at the very last minute, stressed me out because he didn't give me a lot of time to do the loan, but we did it. But they did switch because they weren't getting the right information. I have another client, same thing right now. I shouldn't call him a client because he hasn't applied for a loan with. He has been working with this lender, supposedly been in business for 25 years, been working with this lender for 2 months. He thinks he's approved. He doesn't know he's approved. He doesn't know what type of loan he's getting. He hasn't got an idea what his payments are. He wants a loan that'll recast, but he doesn't think it's going to recast. And I can't get him to, I'm like, dude, what are you going to wait for the day before closing to switch over to me? I need enough time to structure your loan and I can do it. But the problem is the other guy is too inexperienced, even though he's got 25 years. I don't care if you got 25 years. You could have sucked for 25 years at what you do. And I think he did. And he's guiding this guy in the wrong direction. Don't wait too long. Call me. I'll give you all the tools. I'll tell you how to do it. My name's Bruce Woodburn. I want you to call me right now. Just pick up the phone, give me a call, go to my website, apply for the mortgage now, purchase or refinance your home equity line of credit. 407-706-3313 or 813-213-4009 or go to webringyouhome.com. I'll be right back.